Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. I'm recording this late Friday morning as usual on March 24th. So there's been a lot of movement this week. We had the Fed, we had Janet Yellen, we've had reversals, we've had bounces. We're down this morning, although we're kind of rallying back now a little bit. Net, actually the indexes haven't done too much. The Nasdaq's up maybe 1%, small caps maybe down 1%, and everything else is kind of in between. So nothing's really changed with my thinking. It's kind of an on the one hand, on the other hand market. On the one hand, and I can't ignore it, is most stocks, most indexes, and much of the broad market are in intermediate term downtrends, or at least not uptrends. And we're just seeing extreme weakness, obviously in the banks and cyclical stocks and stuff like that. So, I've seen too many rodeos over the years where financial stocks, they're so interconnected that when something kind of comes loose in the system, it doesn't always, in fact, a lot of times it doesn't, but it can sometimes lead to some waterfall type declines like we saw a couple weeks ago. So we'll see how it goes, but I think that in and of itself, just looking at the indicators, is enough to stay mostly cautious. On the other hand, I can't ignore, especially as a growth guy, but I can't ignore the relative strength in the Nasdaq, even in the unweighted Nasdaq. It's not just Apple and Microsoft. There's a lot of sort of new potential fresh leaders that are actually perking up, reacting well to earnings. Which is kind of what you tend to see later on in a bear market, where growth will sort of lead the way down, but they'll also bottom first, show some relative strength before taking off. I'm not predicting anything. Maybe that takes months from now before that happens. But I can't ignore that either. So net, like in Cabot Growth Investors model portfolio, we still have more than half the portfolio in cash, and I'm content to collect my whatever 4% money market yield or whatever. But we did do a little nibbling this week. I think a little nibbling in some names, preferably on dips, like we're seeing today in some of these stocks, is okay as long as you're comfortable with the risk. But we're talking small positions, loose leashes, and in the context of holding a lot of cash, okay? We'll see how it goes. I do think, like I said, sure, given financial stocks and the broad market, it's certainly possible we kind of unravel further here for another few weeks or longer. We'll see how it goes, depending on what happens in the real world. I would also just say, and I know this sounds crazy, but if something actually goes right in the world, which we're not used to in the last couple of years, but if inflation comes down, Fed cuts rates or whatever, the banking crisis isn't that bad. If something actually goes right in the world, I actually think there's a lot of stocks in the Nasdaq and elsewhere that really do want to go higher, and that the market itself might be set up for a nice leg higher. We'll see how it goes. Right now, I think it's best just to mostly stay cautious and let everyone else fight and overreact to every headline. The 10 headlines that come out every day that move to market. Let everyone else fight that battle for the most part. Let's sit back and wait and see how it goes and see if we can get something on the upside here going forward, okay? Let's hop on the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Let me get my pen out here. So we're starting here with the Nasdaq, and as you can see, if you just looked at this, you're not saying it's 1999, obviously, but you're not saying there's a banking crisis either. Again, you just kind of have this long bottoming process. Nice rally, sharp pullback, but good support in here. And really, even this week with the hesitation, it's bounced back pretty nicely here since the banking plunge back a couple of weeks ago, all right? Now, a lot of people are saying it's Apple and Microsoft, and that is true to some extent. But even if you look at, this is the QQQE. QQQE. Let's see if I can pull that up. This is an ETF that just is an unweighted, or I guess equally weighted Nasdaq 100. So it's 100 stocks, 1% each. So Apple is the same as everything else in there. And is it as strong as the Nasdaq, which is probably up here? No, but it still looks pretty good, especially when compared to some broad market indexes like I'll show you here in a second. So, intermediate term, it's more neutral. Maybe the Nasdaq's a little positive, but I'm just showing that for relative strength. Right here, you can see the relative strength line to the S&P is actually ticking to a new high today, even though it's down a little bit. All right. Now, when you look at, so running through the indexes, which I do every morning, S&P 500, below the 50-day line, not a horror show, kind of in no man's land. We have this bottoming area. Now it's trying to hold this area, so on and so forth. But just kind of no man's land on an intermediate term basis. But when you dig into the small caps, IWM, this is kind of, again, waterfall, lower low this week. Shakeout here, maybe not a shakeout, but a dip below this prior low in December. The mid caps, MDY, a little bit better, but again, kind of dipping below December. Very sharp decline in here. And the New York Composite, which has a lot of financials and energy stocks, which have been very weak. This kind of lagged the entire time, you can see in January anyway. And again, just very sharp decline and kind of near its correction lows here. So the broad market, whether you're looking at just this or you're looking at the number of stocks hitting new lows, which I like to look at, whatever, it's very weak, and you can't ignore that because, good stocks or sectors or themes or whatever, good things can go bad in a hurry in a bad market. So if we kind of unravel further, or something bad happens over the weekend or whatever, the virus can sort of spread, okay? So far, though, the Nasdaq is holding up. Just looking at more charts, just to give you a flavor, this is obviously the belly of the beast right here. This is the XLF, which is obviously financial stocks. And really just know, you've had like little bounces in here, which are sharp. They're up 2 or 3% on the day. But you can see it's really not, in the context of decline, any bounce at all. And now we're hitting new correction lows as of this morning. KRE is really the fund on the margin. This is community banks or regional banks, whatever it is. You can just see a complete meltdown here, kind of a crash for the most part, and still hitting lower lows. And so, along with the small and mid cap stuff. So long story short, the broad market, very weak, okay? But you have the Nasdaq, you have the unweighted Nasdaq, you have semiconductors that are holding up very well, okay? You have a lot of recent IPOs. I mean, even looking at, I'm not going to say this looks great, but last year, if I was saying, hey, this is the worst of the worst thing to look at, you'd be looking at the ARK fund, ARKK. Okay, this was kind of the leader on the downside, sort of the poster child for the technology bubble popping or whatever you want to call it. Right here, still well above. This is the December low. We saw small caps, mid caps dip below their December low. ARK way above it at this point. Seeing stuff like that. Whereas now it's been replaced by other things. So you do tend to see that. I'm not saying go out and buy ARK, but you tend to see this relative strength later in a move. The other thing before I get into individual stocks is just, this is the 10-year note, okay? I've shown this before. This, 40 means 4%, okay? It just looks like interest rates have probably topped for the cycle. I don't know what that means. I'm not an interest rate guy at all, but I'm just saying, this is sort of a big double top. Obviously, it's news-driven decline. But the fact now is, for the first time since this whole interest rate cycle started, you're starting to see rates lower than they were 6 months ago, which is kind of an old trick of ours to say, are we in an uptrend or downtrend? And so, I don't have the exact indicator on this chart right here, but whether it's a 10-year note or the 5-year note, which is this, or the 2-year note, you're starting to get to the point where intermediate to longer term, this sort of break in interest rates for mortgage rates and all the things it affects is going to be a positive. Short term, that doesn't mean that. It can be obviously a sign of panic and worry. So we'll see how it goes. I would just say that's kind of a tertiary positive. And the same sort of thing, when you look at XLP, I mention this every week, there's not a rush into defensive stocks. When you look at junk bonds, which this is I don't look at junk bonds and make any trading decisions. So I don't want, trying to make it sound like this is some key indicator. But you look at junk bonds, it's not, it's not pretty or anything, but it's not like melting down. And this doesn't even take into account dividends or anything like that. So it's kind of an interesting situation where you do have panic, you do have some extremely ugly action in bank stocks, and you have a lot of cyclical stocks like, United Airlines look great, and now it's just gone right down the chute. You have a lot of cyclical stocks that look terrible. But overall, you have sort of a lot of areas that you'd think would be melting down if there was going to be a panic, not, holding up. You don't have a big rush into defensive stocks and stuff like that. And of course, you still have growth stuff holding up well. So net, I think it's best to be cautious, but I do think it's okay to do a little nibbling in some of these resilient names if you have a lot of cash, if you're comfortable with the risk. If you're not, just wait. But if you're comfortable with the risk and, hey, if it doesn't work, you take a little bit of a paper cut, but go forward. I think it's okay to look for some of these things on dips, okay? And there's a ton of names, and a lot of them are newer. This is Agilon. I've mentioned these before, but this is Agilon Health. It's the value-based care company. One of their peers got bought out by CVS 3 months ago, something like that. Big bottom. It's really changed character since the start of the year. And it's volatile. It moves around 5-10% a week sometimes. But you can just see it's just, volume's picking up. And the stock this week is pushing to new, I don't even know, year and a half highs, something like that. I mean, that looks pretty good. Duolingo, I was going to say duopoly. Duolingo, I keep mentioning this. I mean, no, you would not know there's a banking crisis. I mean, just a huge blast off and just, really just powering ahead here. even though the market's been weak. This week we saw On Holding, which is I mentioned this a few times recently, I think, but this is it's a Swiss shoe company, athletic shoe company, but it's becoming a little bit more of a lifestyle brand, and you kind of had this bottoming base, whatever you want to call it. And I mean, whatever you want to say this is, it's a lot of buying, it's a ton of volume, it's a huge breakout, and the stock obviously is acting, very well this week, even as the markets had a lot of volatility. Supermicro Computer, SMCI. Now this one, to be fair, we started mentioning this back, months ago. So, you're not in the first inning on this sort of thing. It's had quite a few, runs here sort of thing, but it, looked like it was kind of done for, came back. Let me get on the daily chart. I mentioned this earnings reaction right here. The stock was trading down here, I remember, in the pre-market or after-market or whatever it was. Never got there, started to rally, did pull back here with the market initially, but has gone bananas on the upside, pulling back today, but totally normal action. NVIDIA looks like it could be the exception to the rule. Now, fair disclosure, I said, maybe partial profits up here for top 10. We bought it just a month ago, down here somewhere. I think it could easily come in some, but it does, on the weekly chart, I keep saying this, it's had one down week this year, and versus, how many above average volume weeks is that? You can count them. So this could be the exception to the rule, where it's kind of like one of these old winners that does come back to life. We'll see how it goes. But there is some resistance up here. But chip stocks, NVIDIA could be sort of a liquid leader again in that space sort of thing. Elsewhere in the chip space, there's a ton of them. But I think I mentioned last week, here's Cirrus. This continues to act well. Now maybe, again, good stocks can go bad in a hurry in a bad market. So if the market sells off, or if there's a rotation, maybe the market bounces and these banks that are down 50%, they bounce, airlines bounce, but they start to sell some of the the things that have been like NVIDIA that's been racing higher. So you can never tell for sure, but just overall, the stock, I'm sorry, but big base, huge rush here on volume and very tight trading in there, regardless of what the market doing. That is pretty constructive action, obviously. First Solar, I've mentioned, again, you're not early in the move. The move kind of started 9 months ago or something, but even though other solar stocks have been sort of iffy, this thing really took off here on earnings recently, pulled back with the market. It did get rejected a little bit near its highs, but still just hanging in there pretty tightly. That looks pretty good. Advanced Micro Devices, another chip stock. I forgot to put this in with the other two, but just racing higher. And again, it's not like last year we saw a lot of this sort of thing where the stock might thrust higher, base out nicely, show some relative strength, break out, but then 3 days later it's right back in the soup, right? So far, maybe that happens, but so far we're not seeing that. We're seeing breakouts actually follow through a little bit. It's not like things are running away on the upside for the most part, but acting very well. Advanced Micro. Pinterest, this is kind of interesting. We own this before, but good earnings estimates. Obviously, business went down last year pretty good. The stock got destroyed. You can see this is actually a very persistent downtrend. But it really started bottoming out last spring, like some of the best stocks, and it's just kind of creeped higher here. And then it sold off support recently at the 40-week line. You can see some buying in here recently. And the stock actually was hitting a new relative performance peak as of this morning. Anyway, it's not really at the top of my watch list, but I'm just pointing it out. Some of these old winners kind of have put in this many months of basing action, and they don't seem too worried about what's going on out there. It's not like we're going to have some huge recession. That's what they say. Arista Networks, I've mentioned, it's just a beast. It just broke out. Huge volume last week of this consolidation. Actually up a little bit more this week, despite the market's wobbles. Dick's Sporting Goods, this is on a pullback. You can see it's starting to pull back here. We're seeing this, but it's not my kind of name, but nice sort of stair-step pattern, gaps on earnings. Yes, it pulls back in here, but maybe support near the 50-day line. Palo Alto Networks has been acting great. It just changed character this year, gapped on earnings, and you can just see the last 3 or 4 weeks in there, still very tight. Again, doesn't mean these things can't, again, it kind of hit a minor new high here. Maybe it shakes out, but overall, that's still a nice general picture. Fortinet, FTNT, same sort of thing. Kind of had this rush higher this year, pretty tight in here, especially if you look at the weekly chart. Might not go, I'm not saying it's going to go soaring higher, but maybe it pulls back, but overall proper action. A couple others, Smartsheet, I mentioned this last week, had this sort of shake and snap, looked good, got nailed with the market, looks like it's toast. Everybody unless you've owned this thing for 5 years, you really should sell on that sort of move because odds favor a lot more weakness when the market's getting weak. But then it reports earnings and everything changes, comes right back in, and it's kind of a vacuum of selling pressures. That looks pretty good. And just last but not least, this is KB Home. Obviously, like I said, mortgage rates, interest rates coming down, probably mortgage rates too, I assume. So this isn't the number one home builder or anything, but again, just kind of rushing higher here. And on the interest rates, but also a reaction to earnings yesterday, so holding up well. So there's just a lot. I mean, I could go through more and more. There's just a lot of stocks holding up well. You can't be sure they're going to continue to hold up well, but, and I would take the broad market stuff seriously. It's easy if you own 3 of these things to say, oh my God, the market's healthy, all my stocks are up. You do have to keep a broader picture here. So with the broad market very unhealthy and with banks really in the toilet, I do think it's important to hold a lot of cash, but just keep your eyes open. I think it's okay to do a little nibbling, but just keep your eyes open for either event. I do think there's a chance we could, I don't want to say unravel, but we could really sell off more. Maybe we're in for, if we look at the spiders, maybe we're in for kind of a retest of the lows sort of thing like we were back here, something in this area. It's always possible. And if we do that, chances are even the resilient stuff will get hit. But I would just keep your eyes open too, because I think, like I said at the outset, if something actually goes right in the world, I know that I kind of joke about that because nothing has in the last couple of years, but if something kind of goes right in the world and inflation comes in or the Fed cuts rates by 50 basis points, I do think this is a pretty good setup in here, especially on the growth side of the equation for a lot of these stocks and the Nasdaq itself. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.